Okay, so you're sitting there and you're thinking, how do I
Yeah.
turn $100 into $1,000?
Exactly.
And you want to do it in the stock market.
Of course, who doesn't?
Who doesn't? Right. It's like the dream.
So it's pretty good.
Right. Go on YouTube and you see all these thumbnails, people holding up cash,
Oh, yeah.
Lambos in the background, and
The dream life.
yeah, it's all very tempting.
Yeah.
But today we're going to do a deep dive
Okay.
into how one trader is actually trying to do this.
I like it.
We found this YouTube video. The title is Turning $100 into $1,000 Trading Stocks.
Okay.
This is episode 2
Episode 2.
by Jenny Hoyos.
Arr.
Now, just to be super clear up front, we are not giving financial advice.
Of course not.
Please don't take this as financial advice.
Do your own research.
Do your own research. This is just for entertainment and educational purposes.
Right.
We just want to see what she's doing, how she's approaching the market, and see what we can learn from it.
Makes sense to me.
So what's interesting is that in this video, Jenny's actually super upfront about the fact that she lost money on her previous trade.
Really?
She's like, hey, I tried this before, it didn't work out. But she says she's coming back with a different approach this time.
So she's not giving up.
No, she's persistent, which I kind of admire.
I mean, yeah, you got to respect the hustle.
Exactly. She's not letting one loss stop her. But I guess that also kind of highlights the reality of stock trading, right?
Absolutely. I mean, there's inherent risk involved. And just because you had a losing trade doesn't mean you're going to win the next one.
For sure.
Yeah.
So this time around, she's really focused on what she calls hot options. She's using the moomoo app, and they have this feature that highlights hot options. So I guess that's where she's focusing her attention. What exactly are hot options, though?
So basically, hot options are options contracts that are seeing a big spike in trading volume.
Okay.
Usually because there's some big news or a sudden trend in the market.
So it's like everyone's rushing to buy or sell a certain option.
Sure. Pretty much, think of it like, when a store has a huge sale and suddenly everyone's rushing in to grab the deals.
Makes sense.
So people jump on hot options because they're hoping to capitalize on that momentum, make some quick gains.
So is the main appeal of hot options like the potential for faster gains?
Yeah, exactly. It's all about leverage.
Oh.
You can control a larger position with a smaller investment.
Oh, I see.
But of course, that also means there's more risk.
Right.
If the momentum shifts against you, you could end up losing a lot.
Like that sale at the store, the frenzy eventually dies down.
Exactly. And if you're still holding on to those hot options, well, you might be stuck with a bad deal.
So Jenny's diving into these hot options, but she also mentions using a specific strategy she calls scalping SPX puts.
Okay.
And this is where I need your help because, honestly, it sounds a little intimidating.
Yeah, that does sound like some advanced stuff.
Right. Can you break that down for us? What does that even mean?
All right. So first off, SPX, that refers to the S&P 500 index.
Okay, I've heard of that.
Yeah, it's basically a basket of 500 of the biggest U.S. companies.
Got it.
Now, puts, those are a type of option contract that becomes more valuable when the underlying asset, in this case the S&P 500, goes down in price.
Okay, so if the S&P 500 drops, Jenny's puts would increase in value.
Exactly. Now, scalping, that's where it gets really interesting.
This is the part that sounds like brain surgery to me.
Yeah, it's a pretty fast-paced strategy. Imagine a hummingbird, flitting from flower to flower, just taking tiny sips of nectar.
Okay, I'm picturing it.
That's what a scalper is doing in the market. They're making very quick trades, holding positions for just seconds or minutes sometimes to capture those small price movements.
Wow, so you have to be super quick to do that.
Yeah, you need lightning-fast reflexes and a very good understanding of what's happening in the market in real time.
So this isn't like a buy and hold forever kind of strategy.
Definitely not. It's all about exploiting those tiny, fleeting opportunities in the market.
It sounds kind of stressful, honestly.
Oh, it definitely can be. It's high risk, high reward.
Like a financial high wire act.
That's a great way to put it. There's potential for profit, but the margin for error is tiny.
So Jenny's basically walking this financial tightrope using this scalping strategy with Apple. She's betting that Apple stock is going to go down
Interesting.
because it's been on a downward trend lately.
So she's looking at the recent performance of the stock.
Yeah, and she's thinking, okay, I think this trend is going to continue. I'm going to try to make some money off of that. But is that really enough to go on?
I mean, it's definitely a starting point looking at how a stock has been performing recently,
Right.
but there's a lot more to consider.
Like what?
Well, seasoned traders would dig a lot deeper. They look at things like the company's earnings reports,
Oh, okay.
industry trends, and overall market sentiment.
So it's not just about looking at a chart and seeing if the line is going up or down.
Not at all. There's a lot of research and analysis that goes into making informed trading decisions.
So you got to understand not just where a stock has been, but where it might be headed.
Exactly. And when it comes to options trading, implied volatility is a big factor too.
Implied what now?
Implied volatility, it's basically a measure of how much the market expects a stock's price to fluctuate in the future.
Oh, okay. So it's all about anticipating those big swings.
Yeah, and that can have a huge impact on the price of options contracts.
So there's a lot more to it than meets the eye.
Absolutely. It's not just about rolling the dice and hoping for the best.
Now, one last thing that caught my attention was that moomoo, this app that Jenny's using, is offering free stocks as a promotion.
Oh, yeah, I've seen those ads.
It's like a really clever marketing tactic, right?
For sure. It's a great way to attract new users, especially those who might be new to trading. Give them a little taste of the action.
Yeah, free stocks. Who doesn't love that? But it also made me think, trading platforms are businesses at the end of the day.
Right.
And they make money when people trade, whether those trades are successful or not.
Exactly. It's important to remember that, the house always has an edge.
So it's like a reminder to be cautious, not to get swept up in the excitement of freebies and all that.
Definitely, you got to stay level-headed and remember that there's always risk involved.
So I guess the main takeaway here is that turning $100 into 1,000 quickly, like Jenny's trying to do, it's possible, but it's a risky game.
Yeah, it's not a guaranteed path to riches by any means.
It takes a lot of knowledge, skill, and a bit of luck, probably.
And even then, there's no guarantees.
It really makes you think, like, what if instead of focusing on these quick wins, what if we focused on building a solid, diversified portfolio over the long term?
That's the classic approach, right?
It might not be as flashy or exciting as scalping SPX puts.
Right. It's not going to get you on YouTube with a Lambo.
But it's a proven strategy for building wealth over time.
Yeah, slow and steady wins the race, as they say.
Exactly. So maybe that's something to consider for all of us,
Yeah.
step back from the hype and think about the long game.
Makes you wonder if there are other ways to turn that $100 into something more over time without taking on so much risk.
Interesting thought to leave us with.
Definitely something to ponder.
Thanks for joining us on this deep dive.
My pleasure.
Catch you next time.
See ya.